Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures have a positive tone this morning after we held above that 1600 level yesterday and held most of Friday's job-filled gains. So what does that tell you about the strength of this move?
Well, it tells you that we're digesting. It tells you that there's no rush to get out of the exits, because a lot of people were saying, oh, why were we up that much on Jobs Friday? But meanwhile, we were technically poised for a move to the upside. So when we come in this week and you want to take a more micro look at it, you want to see, okay, what could we do? How could we make cash flow? Let's see if we could hold Friday's gains. You look at the spiders, not the SPX here, and you will see that here is that gap. Okay, this was where we closed on Thursday, big gap up Friday. Didn't really get much traction intraday. We probably were at our highs by 10:30 Friday. Then yesterday, nice little day. We held a higher, went sideways. So if you want to, write down some levels here, I would say this is where the gap starts at 160, 104. Here's another little micro spot at 160, 142. And then this is your pivot resistance, which I think we're opening above right now. So we stay above yesterday's high of 162.01. We could continue to extend, and shorts that have been rolling it up this whole way are probably going to continue their frustration, while longs rotating through quality areas, they continue to get rewarded.
Well, at various points in this rally, I think you've held as much as, say, about 15 longs at one time. How many positions do you come in today with?
Just for full disclosure and compliance, I think, at some point of the rally in January when we broke above 1474, I might have had 14 to 15 longs. And that was when I felt we were in our core long scenario for the first quarter. Now, as we're extending and, you can't really sink your teeth in, I think I come in today with like 5 longs and 1 short. So the moral of the story is here, you could stay with the move, you could have less positions on, less size, but you can continue to make money and rotate through spots. You could add tier sizes, go to different arenas. So at this particular point, I'm trying to stay with it and not fight it. And then when I see something different, then I'll make adjustments.
Right. Rotation continues in this market. The banks led yesterday's move, driven by Bank of America. And this is something traders really like to see, this group in the lead.
Yes, because we're just comfortable with certain names, and during the course of this rally, you've had various names leading the move. You had consumer staples, and then you had some healthcare, and then you had different groups all over the place. So for me, I know I feel more comfortable when it's the banks because I'm very comfortable trading them. I've been trading them for a while, and I know we've been focusing, like you said, on Bank of America since the summer. First thing we had was a call spread back at $8, and since then, there's been multiple setups in Bank of America. And if you look here, it's been rewarding you lots of different times, lots of great patterns. Like this was when it ignited at $8 over the summer, gave you a really nice move. Remember, it went sideways, hovered below that $10, $9.95. You could have, loaded in for a core trade, and you had a push, and then it went sideways, and then all in all, where are we now? A nice upper consolidation. I know right around here it had that push through that failed, which gave us some corrective activity, but then lo and behold, went sideways, held higher. Then yesterday we talked about adding through 1240, 1241, or even 1250 to close at 1288. So right here, Bank of America, you have another price point around 1294. I wouldn't be surprised today if we see a print above 13. And if you want to take a little bit off there, fine. But if your time frame is longer, like we mentioned in our 2013 thesis, I don't see any reason why we cannot see at least 1440, if not upwards to 16. So just know your time frame.
And Bank of America lifted other stocks in this sector yesterday. Take Goldman Sachs, for example, which has been on the radar for potential breakout and had a nice move.
Yes, and this one has been lagging. It's not at 2013 highs, but it's had a big move. And sometimes this stock could be tricky. Yesterday, it had a spirited move off the open. You look at it, and then it traded a little off the high. So I would say if you're in Goldman Sachs, which I did not use as a vehicle yesterday, you could see that it did break or on the verge of breaking this downtrend. Actually, it broke above it. So now I'd like to see it hold above it, hold above 147.50, and then at some point, we take out yesterday's high. I think some traders will add to it. So above 149.54, you then have your next move to 151.45, and then hopefully at some point it gets back to the highs early this year. Remember this move, this was a fun move in Goldman Sachs through December to start the year where it held the 8-day. And since then it's been correcting. So at this point it has taken back all moving averages. So I would like to see it continue. It's still lacking power, but you can't have everything.
You can't have everything. One of the biggest gainers of the group yesterday was Morgan Stanley, which rose nearly 2.3%. It has been acting better since it broke out of the descending channel on Thursday, but what does it need to do to keep that momentum intact?
It's, same story here. This one was a laggard for most of 2013, or it had spurts, like periods when it got better, and usually it was always the last to play catch up. But I think there is a lot of talk out there that their investment banking division and their wealth management's doing well, because if you have a wealth management division that does monthly funds into S&P arena or in other sectors, their managers are probably doing well, right? They're saying hedge funds are not performing because they're trying to be too cute, but wealth managers going into funds are probably performing like the vanilla only mutuals. Well, anyway, that's a little too deep. You look at Morgan Stanley right here, and you'll see big descending channel where, remember, on this day it had a nice igniting bar, came back, retested it, closing the highs here, big gap up. This also held the gap from Friday's open, performed pretty well, went above Friday's high, and now it's going to take some time to get up to this area. But overall, if you look at the weekly chart of Morgan, there's still a heck of a lot of room here, and some are actually saying now that you have the start of a big time cup and handle pattern, where here is your cup, there is your handle. If it gets above this 24, you have from just say 14 to 24, that's 10 more points. That takes you up to 32-ish to 34 at some point this year, and that would be a heck of a move. And if that is the case, I want to be following it. I want to get involved.
And Citigroup extended as high as 48.05 yesterday before it did give back some intraday gains into the close. But does it look good for some continuation today? Yeah,
well, this one's the closest to 2013 highs, because remember when the stress test took place, it got, I think, higher rewards than some of the others. And then on earnings, it did also come in a bit better, but it was in a tricky market time period. So here you are. Yesterday couldn't break above 2013 highs, but that doesn't mean it can't try again today. 48.04 is that level, gets above there. There's no reason why you can't tag 50 plus. It's giving you some nice entries along the way. I wouldn't chase it and go all in up here, but if you're long it, stay with it. I do have some, and if it does get above yesterday's high with some kind of authority, I would stay involved, because there's no reason, again, 50, 52 at some point, could be the summer, could be the fall, but I would stick with Citi.
Now, what about SunTrust Banks? This name has been trading in a range for about the past 6 or 7 months. It's now at the upper end of that range, but maybe this lift in the financials could be finally what it needs to get past resistance?
Yeah, and this is something that's not really on my beaten path or something that I focus on, but as I look at it on the chart, it looks really good. Look at the size of this channel. Okay, coming up, knocking on the door of this 30. Typically, the type of move you get is the size of the channel, so from 27 to about 30. That would give you a move above the prior highs here, well into this 32 plus area. So a break and close above this 30 area, this too could make a nice move if you want to be in something different that's not a name that everyone trades. Let me just take a quick look at BlackRock, see how that's doing. But look at BlackRock, best in breed, already at highs. So it's showing you that the leadership banks that show relative strength are already pressing ahead.
Well, we're also seeing food and beverage names rewarding investors. We're going to go in the trenches with some of those stocks, but first a quick commercial break. We'll be right back. We're going in the trenches with food and beverage stocks, which are extending to new highs. Would you say, as in general, Sky, is it too late to enter now?
Well, you never really want to chase moves, but doesn't mean they can't go higher. And with a lot of these stocks, some have already extended 2-3 days into 2013 highs, so it's always tough and tricky to enter there. So if you look here at Starbucks, I think we were going to have a Starbucks commercial, but it got canceled. So we went right back into the stock itself. So here you go. This was the last breakout. This was 59.71, and then another little flag pattern. So this was your other tradable pivot. I know Charcoal's had this off the charts a few times. And here, into new highs, probably opening up a little bit. I'd rather see you trim and trail than enter. If you miss this one, learn why, and if it happens to pull back to the 8 or 21-day moving average like it did here, that would be a better buy.
Take a stock like McDonald's in this group. It's been had a nice rally holding the 50-day during the recent pullback. It's been consolidating above the 8 and 21-day, so getting ready for a move higher?
This one isn't at highs, it's consolidating. It's funny, like these mega cap names, the blue chip of blue chips. 2 years ago, everyone said, you can't buy McDonald's, the fast food, the french fries, it's a new wave, and PS, wound up making new highs. So it shows you that some of these type of names you could buy when they're in the hole, when nobody wants them, and then sometimes with momentum. And right now, I'm looking at the chart pattern. I don't see anything great right here, except for the fact that it is holding above the 8-day. Actually, this does look good. If it could hold above this 101, 102 for a little while, I think you do get another trade here, and that will be through 103.34. I don't like it doesn't really matter. I was going to say I don't like the fact that it was weak yesterday when the indices were kind of flat, but that's reading too much into it. The 50-day has held, all the way back since the start of 2013, and this has been a very smooth ride. And unless you eat McDonald's on a car trip, it's more smoother being involved in the stock.
I can't wait to see. Yeah, probably. All right, well, let's move on to Chipotle, which had been consolidating but finally broke out yesterday with a clear move through Friday's high. What do you think of it here?
I think that this is something I've spoken about the last 3 days. Two different price points. One was, I think, 363, one 373. Look here. Something that's been acting better. Here was one pivot when it went above this 350, and then we talked about it clearing this area, and yesterday it did it. It didn't close with some power, but overall nice bull flag. Some guys I think Sperling might be long this. I'm not exactly sure, but above 376.27, it can extend. If you want to take a little bit of a look further back, there is still some room to fill this gap, and this gap that's what, 307 it gets filled? Or no, sorry, that's 400. Yeah, there's the low, 393. So there's still about 20 more points till it fills the gap. It's had a long run. I would just keep it small here because it is a wide stock. And
how about PNRA, which has made a comeback? It's been able to erase most of its losses from earnings.
Yeah, and this one, is consolidating. It's trying to reset up. This whole group itself has giving a little bit, food for thought. Anyway, with that said, right, a red dogism. It's from here at 170 all the way to 182. It's going to meet some resistance. I would say let it hold above this 179. If this holds above 179, does a little sideways action, I think you'll have a better platform to break out above this 183. And
we've got Dunkin flagging at the 52-week high. If we get a pullback, should we nibble a little bit?
Yes, you could dunk in.
Oh, God.
Okay, all right, no more. I always like to joke about Dunkin because Dunkin was one of my three amigos. They talk about how you have opportunity with new issues, and Dunkin has been one of them where we're like, put it in the drawer, forget about it. You have a little McDonald's, a little Starbucks, we mix it up. Maybe, that's the concept for Dunkin Donuts. And you look here and you'll see the chart. Way back here is when we talked about it a lot. That was when you had the new issue, you had a nice little cup and handle, you had a big time breakout up to about 37, pulled back, kind of was out of play, and then once it broke this downtrend right here, it's been just unbelievable again. And every day someone tweets at me, thanks for the Dunkin, you still there? And I'm not long Dunkin right now, but at this point, doesn't really matter. Sometimes I'm an offensive coordinator. Here's your 39.60, that was your last real buy price, and now just trim and trail and stay with it. These type of things, don't come by that often. So if you're in it and you're in it from, a year ago or so, just I'd say keep it in the drawer and just take a macro approach.
Dunkin, that was bad. Let's do some quick hits here and talk Apple, which was one of the day's best gainers after Barclays raised its price target on this stock. It rose 2.4%. Is there still room to the upside left?
I think there's small room to about 470, which was a peak from a month or so ago. So if you look here, stock's been acting much better ever since it cleared this 419 when I was on my Boca trip. This is when, I think I got into my tier 1.5 to a tier 2. Then it cleared the 50-day, then it held the 50-day and continued. I am not long Apple anymore though right now. Here is your last pivot. This is what, 469, which I think it could tag today. So see perhaps if it stalls around there, so you might want to trim into that. But ultimately, it's acting better that I think there's no reason why I can't try and get to the 200-day at 498 at some point. So I would still take this incrementally. What you shouldn't be doing, though, is just shorting it. The same guys who are trying to buy it the whole way down, if you're trying to short it because you think it's already at a 40 or 50 point move, look where this thing came from. It came from 700, and this is the bounce that we've had so far. So granted, there was money to be made there from the long side, but it still, can continue. This is almost turning into the pain trade for some. Thank goodness it's not me, because I just don't, and just not long it, so I'll just wait. Anyway, with that said, I would trim in front of 469.50, and then if you could pause again, use that as a pivot to enter for a move to that 200-day.
All right, Netflix broke out of the tight range to the downside yesterday with a gap down, did pick up buyers around the 204 level. So what do you think of it now?
I think it's tricky. Like yesterday, we talked about how the range was getting tight and Netflix doesn't stay tight for a while. If it were to break below 210, 209, you could see a cute short. And it happened so quick, and there were people who jumped on it real quickly. But then once it hit like 205-ish, like you said, 204, it just slowly stopped going down and just trickled up. So you had to take that trade quickly. And now if you missed yesterday and like you weren't here and see that, you would come back and say, oh, okay, still looks decent, still, holding in this range. Almost had a little red dog reversal here, and now it's right back in the range. So just tricky. In order for it to get really going, it's going to have to get above 218, 219 with heavy volume, but you don't want to see a move where it goes up and fails like it did yesterday to the downside. So who knows how long it's going to stay in here. I would just continue to take trades, and if you're going to do something here with any kind of size, make sure there's a ton of volume and maybe some type of news catalyst.
Well, and we know that LinkedIn had a big down move on Friday after missing earnings expectations on Thursday night. It was able to hold Friday's low yesterday and post some gains. So do you think we'll be able to continue pairing losses here?
I think this one's just going to need time to consolidate. It's had a huge move. We talked about it 2 quarters ago when it was like 125. That gave you a big gap up and continuation. This time, about 2 weeks ago, I talked about the potential of it going to 200 after earnings. It happened before earnings. So hopefully, if you are risk averse and you don't hold things into earnings, you took your trade prior. You look at the chart here. This was that last calculated move when it triggered above this price here, which was like 186. Then from there, went all the way to as high as 203-ish. Before numbers, so no reason to stay with it, especially after you see a move from where it came public. Look at this, move from all the way back here. Again, this almost looks similar to Dunkin, which is a reason why I liked it and focused on it. You had this cup and handle type pattern with a channel right there, and then it broke above and pow. So up here, if you didn't take anything off, you're a little piggy. But anyway, with that said, this was Friday's low, and it held. First time, so if you want to be long a little bit versus this 173.72, but if this doesn't hold here, you could see it move down to 165. And I'm just going to avoid it for a little while because I think it needs time.
All right, let's talk YHOO, hovering around 52-week highs, holding above all key moving averages. What level marks the next breakout?
I'm just going to say real quick, 25.40 above that, it can continue.
And SINA's in a lot of headlines right now on the Alibaba news. What do you think of playing this one right now?
I actually bought it yesterday. Some people pointed out SOHU, which has had a stealth rally to 2013 highs. I remember being in Boca, seeing SINA up 8-9 points on that news, and then since then it's held the gap. You look at the chart here. I like to trade versus gaps, and here was that big news, which was a little bit over emotional. Came back in, but what did it do? It held this gap, the majority of it, showing that there is power there. So with that being said, yesterday it did clear one small pivot here at 57.30. Now I think I would be adding to it if it can get above 58.27, and then you have the move of around 60 and change. So all in all, this earnings or pro gap should be able to lead to additional gains. You look at something like SOHU that out of nowhere, went to 2013 highs. Maybe even Baidu is a quick hit. We don't have it in there, but I'll mention it because I typically don't like this, but it's coming so far. It's been holding support, ignited yesterday. So if this can get above 87, 89, you could see some continuation there, especially since the Chinese markets overall, had a decent move. So people are looking for some Chinese names.
Well, clearly there is sector rotation out there. There are spots to like. What will you have your eye on today?
Well, I'd like to see some continuation in the banks, and then I just want to see where the money's going next and continue to take trades. And if for some reason we do get some kind of down day in the market, maybe I'll add to some of my spider hedge, especially if we start getting close to that gap from Friday. But until that happens, just keep making moves, keep moving around. You're seeing a little activity also in the ags and in some of the drillers. So there's a lot to do all over the place if you're have an open mind and you have a plan and you look for these setups that could resolve and create some cash flow, besides the huge moves that have taken place that have rewarded macro investors who didn't listen to all the naysayers out there about the fear mongering and the equities are dead and this and that, because here we are with a lot of gains already made, and those of you who caught them, congratulations. Those who are looking to catch them, don't try and do it in a day. Create a process to then capture them.
And that's your morning call for this Tuesday. Happy trading, everyone. Have a great day.